There's a strategy that real estate investors have used for decades to defer capital gains indefinitely and eliminate them entirely at death. It's not a loophole. It's part of two tax codes working together, Section 1031 and the step up in cost basis. So when you invest in real estate, there's some great advantages, tax advantages to owning investment real estate. First and foremost, you buy real estate, you get the ability to depreciate that real estate. So if you pay $1 million for real estate, a certain percentage, 80 to 90% of that, can be used to depreciate against income being produced by the investment property. So there's the first wonderful tax advantage of owning investment real estate. The second, as your property, you hold it over the years and rents increase, what we've seen historically is appreciation. So the property increases in value. So when you sell that property, so let's say going back to $1 million, you paid $1 million, now you're selling the property for $2 million. Well, Section 1031 of the tax code steps up and says you can defer all the capital gains from the appreciation and the depreciation recapture by implementing a 1031 exchange during the sale of your property. So you're going to swap that property for a new property. And part of the overall tax strategy, swap till you drop, that's the first half. You're going to swap. And you're going to keep swapping. So as you roll over into the next property, if it appreciates again and you sell it again, you're going to swap again, swap till you drop. Now, as part of your estate planning, the next part of the tax code that steps up to the favorable treatment of investment real estate is called the step up in cost basis. So now going back to that original $1 million, it's now 40 years later, your million is now $10 million. Now you've depreciated the property to zero, so you can't depreciate it anymore, and you pass. So instead of your estate facing capital gains and depreciation recapture, the step up in cost basis allows your heirs to then declare that they paid $10 million technically. The value of that property is $10 million, so they start from scratch as the original investor did, starting with their $1 million. They now have $10 million of cost basis in the property that they inherited. So that is the one true methodology of deferring the taxes and then actually eliminating the taxes through the step up in cost basis as part of the mechanism of estate planning along with owning investment real estate. So if you're dealing with investors that have investment real estate, the part of the conversation that needs to be had is not only what's depreciation, but what's deferring, Section 1031, swap till you drop, and then what is the step up in cost basis for their estate planning. Great conversations to be had, great tools for investors to know as part of investing in real estate. So if you like this video, hit like and subscribe and check out our other videos.